Welcome back to another episode of Not Financial Advice. I'm Sean, and on today's video, we're going to be taking a look at Facebook stock, ticker symbol Meta. If you're like me, you have a Facebook account that you haven't been active with for probably 18 months. You might be an American as well. You might use Messenger, or you might be viewing this video from abroad and you're active on an app called WhatsApp, which is also owned by Meta. And so we're going to be discussing the company, its stock price, and the fair value of its shares right after this.
You need to diversify your bonds.
The only problem you're going to have is that you didn't buy more. Because by the time you read about it in the Wall Street Journal, it's already too late.
Okay, before we dive into Meta, I'm going to ask you to like the video and subscribe to the channel. A couple things. We're going to do a quick daily recap of my portfolio. Here on my channel, you're able to see 100% of my investments, not only on green days like today, but also on the red ones as well. And as always, if there's a stock or an ETF you'd like for me to review, just leave its ticker symbol in the comments below. I usually will get about 6 or so requests in all together, and then I'll make a big video and notify each of you where you've posted that request for a stock review. But let's get started with today's gains. It is Monday, January 22nd. Today, my portfolio was up $580 or 0.85%. What we can see here is the stock market was up 0.22% in the S&P 500. The Dow Jones Industrial Average was up 0.36%, and the NASDAQ Composite was up 0.32%, with some noteworthy outperformance from the small cap index, the Russell 2000, up just a bit over 2%. And so I landed somewhere between the Russell 2000 and the S&P 500. Very happy with making $575 in the stock market today. Now, here on my portfolio, it's a pretty diversified uh, strategy. And so, what we often do is look at the top 5 gainers and decliners in the day on my portfolio. And oftentimes, that can give you a finger on the pulse of what's moved the market on a given day. So, we're going to just run through my top 5 investments and worst 5 performers today. So, firstly, we had TrueLeave. It was up 8.6%. Foot Locker was up 7%. Best Buy was up 3.5%. Coinbase was up 2.8%. And Green Thumb Industries was also up 2.8%. A lot of those are cannabis companies, which have been doing pretty well this year. In the end screen, I'm going to leave a link for both of the videos I've done, sort of reviewing my cannabis investments. But let's jog down here and take a look at the worst 5 stocks today in my portfolio. I'll ask you to like the video and subscribe to the channel if you haven't already. But just sort of in a countdown fashion here, we have Kraft Heinz down 0.9%. Down around 1% is Tyson Foods. Down 1.4 percent is Coca-Cola FEMSA, or Mexican Coke. We also have down 1.6% Home Depot, and Tesla was down also 1.6% today. Okay, so that wraps up the review of the portfolio's performance today. So let's jump into the topic for today's video, which is Facebook or Meta stock. So as you can see here, Meta has performed really well over all time, up around 900%. But this is a very interesting looking chart, and this tells a bit of a story about my involvement with this stock. And so we can see in late 2021 through late 2022, this stock went down about 74%. And, the way that I look at things, if there's a large company with a moat that has free cash flow and it drops under 50%, that really piques my interest. And so I started buying the stock individually in May of 2022. And at that time, the stock was down about 50%. And so that definitely got my attention. From that point, the stock continued to decline another about 54%. So I continued to hold the stock and to buy more where I could. But since that time, some crazy stuff has happened. It's returned 321% or so since its bottom trading range over recent time. So let's take a look at the different key events here on Google real quick. Looking at the 5-year chart, up 11% on this day after strong earnings. This seems to be a stock that performs really well or really poorly based on earnings reports. And so we'll be taking a look at earnings per share over on Qualtrim just in a second. But what we can also see is the pandemic was a benefactor or a boost to Facebook stock as their audience became even bigger during that time. But then you had the stock start to decline as the 2021 bull market ended and we entered what would become the bear market of 2022. Disappointing earnings on this day brought the stock down 25%, which is where it bottomed out. So looking to the 1-year chart, after it dropped 25% and went as low as it ever had, it was really good to own this stock on this day. So Meta shares rocket 23%, one of the best days in over a decade. Meta stock jumps, putting it back above its $500 billion market cap, an increase in guidance that drove the stock up 14%. And then you had a quarter that was positive. They had a losing streak on a quarter to quarter basis. They had a good report, so they went up 4% that day. And then a poor quarter where the stock also went down 4%, yet it's been up about 26% since that point. So that sort of gives us the big overview snapshot of the price performance of Meta stock. So let's get into Qualtrim, which is a suite of software that I pay to look at stocks, not one I'm affiliated with. So I'll leave a link to Qualtrim in the description below. And as we're diving into this, I'll ask you to like the video and subscribe to the channel. But let's look at the high level metric overview here on Qualtrim for Facebook or Meta stock. So as we can see here, it's knocking on the door of getting back into the $1 trillion dollar market cap club. And then we also can see it's trading at a forward PE multiple of 23, which seems reasonable on the surface here. We can see it has a nice free cash flow yield of 2.4%. And what we can also see is that it has significantly more cash than it does debt, about a net cash position of $44 billion in the war chest. So we're going to get into our green check marks and our red X's now. Let's take a look at revenue for Meta. Over the all-time chart, we can see that revenue is up 31% year on year over the last 10 years. Uh, but maybe more relevantly, over the last 5 years, that revenue growth has declined to 15.9% year on year, which is still quite high. So we're going to be using this 15.9% number to get an idea of its fair value here towards the end of the video. So as far as revenue growth, overall, this looks really, really good. It's going to be our first green check mark of the day. Now, we're going to get over here and take a look at free cash flow for Meta. Um, Now, one thing I'm going to show you, it's a unique tool here on Qualtrim. They are paying their executives and employees a lot of compensation in stock, which essentially, steals the free cash flow from the company and the common stockholder. So this is a pretty unacceptable level of stock-based compensation. Even as they saw their free cash flow drop from this year to this year, they still chose to increase their stock-based compensation. And so this is not one of my larger positions. I'm up on it about 70%. But seeing this, makes me happy that about half of my exposure to Facebook is through different ETFs and index funds. So just a note on that. But we can look at the true figures. The adjusted free cash flow over the last 5 years is going up and to the right. There's a little bit of a drop here, so we can see the free cash flow is growing around 13.7%. Because we see such a big drop from this fiscal year to that fiscal year, let's check in on the more recent quarters and see how Meta is doing on producing free cash flow. We have this handy dandy tool here on Qualtrim. We can change the view over to quarterly, and we're going to look at free cash flow again. We're going to look at it adjusted for stock-based compensation, and they're doing a really nice job recovering that free cash flow in this fiscal year's more recent quarters. So, with all of that in mind, when we look at stock-based adjusted free cash flow over the last 5 years, it is in fact moving up and to the right. So, this will be another check mark for Meta. Now, moving on down the list, let's take a look at their earnings per share. So earnings per share are up and to the right, a little bit more steady than that free cash flow number, but earnings per share have been growing at about 30.5% over the last 10 years. And so everything looks good here. Let's take a quick look at the quarterly, see how the earnings per share are coming along on a quarterly basis. Looks like they're doing quite nicely, returning to where they need to be. So back on the annual view for earnings per share, Facebook stock is going to get another green check mark. Moving on to our next metric to measure this stock, looking at cash and debt for Meta. What we can see here is on an annual basis, um, their war chest is going down a little bit. Certainly, they're still investing into themselves, and so that's okay. But what we can see here is they have significantly more cash than they do debt on the year-on-year chart. And so I'm going to give this a green check mark, but we will use this quarter's most recent up-to-date numbers in our rough DCF estimate for the price of the stock. So the company does not pay dividends at this time. Going on to shares outstanding, they are essentially flat. So this will earn Meta its first neutral rating. And going to ratios, we can look at their return on capital employed, and it seems to be a median of somewhere in the 21% range. This is going to be a big green check mark. This is a company that's able to reinvest in itself very profitably. Let's take a look at their bottom line profit margin. Um, Super duper high, about 33%. So this is a very high margin business. That can be another important recipe for a stock price that you can hope to see rise higher. So on bottom line profit margin, they've earned another green check mark. And then lastly, looking at their expenses in the most recent fiscal year reported, it looks like they're somewhere around $80 billion of expenses in fiscal year 2022. Revenue for fiscal 2022 was like $120 billion, and their free cash flow was a fraction of their expenses. So this will be the first red X that Meta stock has earned today. And last but not least, we can't forget their historic PE valuation. So looking at this chart, say over the last 10 years, Meta stock is trading at a historical discount to their PE multiple valuation. So lastly, this will be a big green check mark for Meta stock. And so that is our quantitative analysis for Meta stock. Let's get into some of the qualitative analysis and have an understanding of this company, who they are, and how they make money. I'll ask you to like the video and subscribe to the channel, and we're going to move over to that now. So the question is, how does Facebook make money? And the short answer is that Meta makes money by selling ads on social media websites and mobile applications, but they also sell augmented and virtual reality products and services. Um, Net advertising sales are the primary source of Meta's revenue. So it's a technology company and an advertising engine. And so they have a few different businesses owned under the Meta moniker. First and foremost is Facebook. Its user base is a little bit older. Millennials and boomers use this. Um, A lot of people share nice things on here. They'll make a post when they have the birth of a child, but at the same time, a lot of people will, show their new racy sports car that they just bought. And in so many words, people will do a lot to sort of, show off the elements of their life that make them look really good. People don't share their real challenges and struggles on Facebook as much, except for the people that overshare. But besides that, on Facebook, there's a lot of vitriol, a lot of partisan political stuff, and it's just overly a pretty negative place. And so I haven't been active on my Facebook account for a long time. Um, it is what it is. And there's also that question, it became known to Congress and the media that Facebook was aware of the negative impact that social media could have on teens, yet they were marketing to teens. So obviously that's a bad thing. But when it comes to the younger demographic, they're more so on Instagram, where Facebook is more so text based. Instagram is obviously very image based. And so that can lead to issues around people's body image, and people will flaunt their lifestyles, or at least the good parts of it, on here. And so this sort of has this at times negative or addictive aspect to it. And that's certainly a good platform to deliver ads onto. But at the same time, when it comes to Instagram, say you're a car guy, you can just go on Instagram and follow 50 car companies and just have it be a fun time waster. When you want to go and see updates about things and businesses and topics that you care about. Um, so that's, their two primary businesses, but that now leads us to Messenger and WhatsApp. So Messenger, something that I use every single day. And as an investor, if there's a product or service that you use from a company every single day, it doesn't mean that it's a good investment, but it's a good place to start looking, especially if you can see that price drop on short-term news. And so Messenger is something that I use to essentially text back and forth with friends and family. I also use it to FaceTime with friends and family as well. And so it's free. Honestly, I've got a lot of really good memories and conversations that are memorialized on Messenger, as well as some not so fun ones. But at the same time, it reminds me of Google. I think, recently they said, "Hey, you're running out of storage. You need to give us 99 cents a month." And so this is a pretty good business model, like a street pusher who gives someone a sample at first, gets you hooked, and then the next time you pay. When it comes to Messenger, if in a few years from now they said you're at 51% of your storage space, it costs 99 cents a month to continue to have your messages archived. Some of these really fond memories or these conversations, say with my mother, I would pay that. I would pay that. But that takes us on to their next property, which is WhatsApp, which most of us may not have heard of. But it's actually a free sort of um, messaging or even calling application that's more so internationally based. And so in the past, it was really expensive for us in the United States to call family overseas, or for families overseas to call from one country to the next. And that's what WhatsApp is just a free international messaging application. Um, but there's some prospects for monetization with this, and even an element of sort of what's called a super app, where payments are going to be integrated on WhatsApp and companies will be able to make posts there as well. And that's sort of a concept that's more so familiar over in China. But there's exposure to international and emerging markets in WhatsApp. And so we're going to actually delve a little bit deeper into that, because I see it as a growth driver for Meta moving forward. But lastly, to round this out, you have Reality Labs, and this is everything to do with all things metaverse, also their Oculus headset. So, to just sum this up here, this data is from late 2022, and I'm sure it's changed a little bit. But I was really surprised to see that 9% of the revenue for Meta was coming from Reality Labs. The majority of the revenue is coming from their family of apps segment, but Reality Labs behind Oculus, um, and all things metaverse. almost 10% of their revenue at that time. Surely it wasn't turning a profit at that time, but it'll probably become a bigger part of Meta's bottom line as time moves forward. And just one last note on that. I think that as you see the different age breakdown between Facebook and Instagram, the U.S. versus international revenue with WhatsApp versus Messenger, I think that when you look at the metaverse concept or these Oculus glasses or the metaverse, it brings to mind a game called Roblox, which is kind of a metaverse concept, really popular with kids. And so I think part of Zuckerberg's strategy moving forward with Reality Labs is goggles or glasses and metaverse style games. And I think that's going to be a future growth driver with microtransactions that Gen Z and Gen Alpha and unnamed future generations will be incorporated into this ecosystem. So I wanted to real quick take a look at one other thing. This probably would be under their reality labs or whatnot segment. But as you can see here, Facebook has partnered with Ray-Ban, and so they have the Meta smart glasses advertised both on Ray-Ban's website as well as on Meta's website. And so these are actually just sunglasses that you can wear. Sunglasses that you can wear, or glasses that you can wear, where you're able to take a picture maybe and upload it just to your Instagram stories, but they're pretty unobtrusive, and it's definitely you know um, this communications and technology aspect, and taking things from the smartphone to a smartwatch to smart glasses. This could provide an Apple like boost to Facebook in the future, but that is in fact undetermined. And so lastly, I wanted to get over here and dive into a little bit more of a deep dive on WhatsApp, because I think it's part of the thesis for growth over the next 10 years. We're going to watch just this first part of this segment from CNBC. I've sped it up to 1.5 times, but I think it's pretty interesting. So, like the video and subscribe to the channel, and let's see what we can learn here together.
Over half of the world's 5.3 billion internet users are on the messaging platform WhatsApp. Owned by Meta, WhatsApp is the world's largest social messaging app, with almost as many users as Facebook. Over 100 billion messages are exchanged on the platform every day.
It's being used truly globally. So think of India, Indonesia, Brazil. It's sort of everywhere and it's effortless to use. You maybe don't think too deeply about using it, but you would be in real trouble if someone took it away.
But that's not necessarily the case in the US. While nearly a third of the US population does have WhatsApp, for most Americans, it's not their primary messaging platform. And though Meta doesn't break out WhatsApp's revenue, it's estimated to be between $500 million and $1 billion, a minuscule portion of the nearly $117 billion in annual revenue that Meta brought in last year. Unlike Instagram and Facebook, WhatsApp doesn't run ads. Nearly all of its revenue comes from business messaging, which it introduced in 2018. With this service, large companies pay a fee to interact with customers on the platform. It's a growing market, and WhatsApp is leaning in.
We expect business messaging market to be worth about 50 billion in about 4 or 5 years' time.
Right now, nearly all of that market share comes from regular SMS messaging. Think of an airline texting you about a flight delay, or your bank texting you a confirmation code to log in. But those interactions and much more could soon take place on WhatsApp, and Meta is looking towards this as its next major revenue source.
Our playbook over time has been build services, try to serve as many people as possible, get our services to 1 billion, 2 billion, 3 billion people. And then we basically scale the monetization after that. And we've done that with Facebook and Instagram. WhatsApp is really going to be the next chapter, with business messaging and commerce being a big thing there.
Yeah, and so I think that's going to be a big driver of revenue for Meta and Facebook moving forward. And that's sort of the end of our qualitative analysis. But you can see WhatsApp growing, and as you saw there in that clip, you have all these international customers in developed and emerging markets using WhatsApp to call family in other places of the world, but they're charging businesses to be able to message with customers. And you could also see that coming to Messenger via Facebook and Instagram in the future, where businesses have come to rely on their ability to message back and forth with customers. That certainly could be another stream of revenue moving forward. So we have a $382 stock. I'm going to ask you to like the video and subscribe to the channel, and we're going to go over and take a look at my handy dandy little free cash flow fair value estimate calculator to see if we can get an idea of what's the fair value for this $382 stock. So what we can see here is the average of their stock-based compensation adjusted free cash flow over the last 5 years. their total cash on hand, as well as total debt, and then their shares outstanding, all from the most recent quarter. And I've done sort of an aggressive assumption on their revenue growth, keeping it at 15% for the next 10 years, dropping down to 3% for every year after that with a 10% discount rate. So $382 stock would be worth $239 or $238 rather, with some aggressive estimates. And so let's just make sure that we can average these sort of bull and bear estimates on the stock. So 238. And then let's go back in here and be more conservative with our projections. Up with a really low number. So 238 plus 173 equals divided by 2. So between the two projections for growth, I'm seeing a fair value on this stock of about $206. Now, with that being said, I want to bring up a quote from Peter Lynch. And here it is. So, a quote from Peter Lynch: investing in stocks is an art, not a science. And people who've been trained to rigidly quantify everything have a big disadvantage. So, let's come back over here to the price chart. And what we can see here is this, on a very mechanical level, I'm seeing the fair value of this stock around $206. Coincidentally, that was right around the time that I started buying in the bear market of 2022. Um, but at the same time, on a stock like this, you're looking at a couple factors. So it's a large cap stock. It's a company not without controversy. It's a company that has high margins. It's a company that has strong top line growth. It's a company that has exposure to international markets. It's a really well diversified company, something that has growth drivers in its future. Um, and more than anything, it's a company that has the ability to reinvest into itself profitably. And so, while the numbers say that it might be around a $206 value, and that at $382, it's likely over its intrinsic value, what we can do is sort of take a look all the way back to the beginning of this chart back in 2012. And if you just follow that trend line from 14 to 16 to 18 to 19, if you follow that sort of trend line on that stock, if you were to just smooth everything out and sort of continue along that trend line, you would see a price somewhere around 200 between $225 and $275. And so I think, with all things being said, I think that's a pretty good range on this stock. I think it's probably worth around 225 to $275. And so I'm going to continue to be holding this company. I'll buy individual shares on any weakness, but it's a company where I see its intrinsic value growing year on year, and with that price continuing to move higher. So this is not financial advice. So again, if there's any stocks or ETFs you'd like for me to take a look at, just leave their ticker symbol in the comment below. Until next time, I'm Sean, and I will catch you on the next one.